Hey everyone, my name's Andy. My channel is Finding Value. This is a financial education channel. If you want to find what the most undervalued assets are in the world and invest in them, this is the channel for you. Click subscribe, click the thumbs up button if you like this content. I went over this presentation a while back, and I'm going to go over it again just because we have a lot of new subscribers, and I want to make sure that everybody understands kind of how to invest in commodities at a bottom. So I'm going to go over it again, give you my opinion on investing at commodity bottoms. So again, I want to make sure use limit buy orders for these small companies. You're going to have to use limit buy orders to buy a stock. This ensures it doesn't fill 10% higher or some crazy amount. It locks in that price, and if you have to move it up a little bit, if it doesn't fill, you can do that a penny or two. I just don't want you to go in and try to buy something and it gaps up 20% because someone put some crazy amount in there and it actually filled. You've got a bid price and you've got an ask price. The bid price is what the buyers are bidding at. The ask is what the seller is asking. When you see that and you put in your order, you can put it at the ask price if that is what you're willing to pay for. A bid is what a bidder is paying for. An ask is what the seller is asking for. Sometimes small stocks have these gigantic spreads between the bid and the ask. Sometimes you split the two, you put it in the middle, and it'll fill. That's what I've experienced. It's up to you what you want to do when you put your order in. But typically what I do is I try to split the bid and the ask, or I just go with the ask if I think it's a stock that's going to continue to move higher. Next is commodity companies. The one thing that you have to realize is the most important part of these companies is price. The price of the commodity. It's not margins, it's not debt, depending how big it is. Look at the assets, look at debt, look at free cash flow and ability to surface debt. You can look at all those things, but price of the commodity is the biggest factor for how these companies are going to move. Sometimes the chart tells you what the market thinks, and you can use this as confluence or the merging of information. If trained, you can see a bunch of smart money buying it before the stock takes off. So some trading strategies here. Do your homework and be the greatest contrarian you can be. Sometimes the companies that are the most avoided say they've got a lot of debt, but you find something about them that is unique. They have debt but acquired $1 billion in assets for $100 million in a down market and did so with low interest rates. The value of the company is 180 million market cap. They have assets valued at PV10 of 3 or 4 billion, but they have some debt. It could be a very good company, especially if the price is already moving up of that commodity that they're selling. Access to more debt and backing by private placement from billionaires is something else that I look for. Usually highly leveraged companies attract a lot of short sellers. You're going to have to rely a little bit more on your technical analysis to catch the bottom and enjoy the ride higher when all those short sellers have to cover their shorts. It's more buying pressure into the stock when the stock goes higher as the short sellers cover their positions. Also look for companies, if it's an oil or whatnot, did they hedge their production to ensure their costs are covered for a year or two? Maybe that's a good thing, maybe it's a bad thing, depends what the price of oil does or the price of natural gas. And sometimes it's good to be a contrarian within contrarians. So think of strategies that others might not be thinking of. Be a contrarian within contrarians. And I did this a while back, but Bannerman Resources, the assets were dirt cheap. It was like 19 cents or 20 cents per pound of uranium in the ground. I like Brandon Monroe. Management's great. He does have, they are a higher operating cost compared to some of the other companies, which is fine. The contrarian crowd is contrarian only to a certain extent. No one is buying this company but me, at least at the time. They could be the best performing company in the next bull market because of its valuation and sentiment towards that company. And I put, or perhaps not, but they've been doing very well. And what was so good about them is their valuations got pushed so low that I was able to buy a lot of shares very cheap, which was great. So I was a contrarian within the contrarians. And again, be aggressive when you know the valuation of the sectors are cheap. You got to be aggressive as hell when no one else is. Stocks give you signs when buyers equal sellers. It's like a group of buyers are all outside of a store during a Black Friday. They're all waiting there at the door, so right when it opens, they can all run in. That is the bulls waiting to buy this stock, but it just hasn't moved yet. Buy before the bulls take off. People naturally want to chase prices. They look at noises, sounds, lights. Hey, look, shiny things. They're attracted to that stuff. You're going to have to be a little bit more disciplined in your approach, where you see the signals and you go in when no one else is buying it. That's where you get maximum returns. Buy a position at the bottom and wait. Buy a second time right when you see strength. That's called cost averaging in, and I say buy into strength. You don't want to buy into weakness, you want to buy into strength. Next, here's SM Energy. This was back in the day. I was just showing you that it's coming down. You've got nice big chart patterns all through here, and I was buying in this portion right in here. So again, you're going to have to be passionate about this. You're not going to win unless you're passionate, unless you like doing this. You should have listened to many of my videos, because the content I have is insane compared to some of these other channels. They really teach, this channel will really teach you how to be a very good investor, a smart investor, one that takes calculated bets, one where it gets you in the valuations are cheap, the wins at your back, and a lot of the work's already done. You just have to find the companies and invest when they're down. And what I'm giving you here on this channel is I'm giving you underhand lobs for people to hit it out of the park. All you got to do is pick up the bat, learn a little bit, and start swinging. Passion's what drives you, and when you're passionate about something and you think about it all the time, your brain will even work problems and solve them in your sleep. This is the type of dedication that is needed to be better than everyone else if you want to pursue this area. So this channel's set up to really educate you guys on how to be very smart, well-disciplined investors. That is the whole reason I set up this channel. I put companies out there that I think look pretty good. Their charts look pretty good. You guys are going to have to figure out if you want to invest in them or not. Do your homework. Look at their presentations. Look at the CEO. Look for them on a YouTube and see if you can find videos where these guys are presenting. It gives you a little bit of information of who they are and what the company has to possess. And perhaps you can, smell a bad company out where you're like, this doesn't make sense, doesn't feel right. Probably not a good company for you. If you guys like this content, give me a thumbs up, subscribe to the channel. I don't know what you're waiting for. Just click the subscribe button. Super easy. That's all it takes. Thank you for listening. This is Finding Value.